Hi everyone. Today's class we are doing AS level paper 11 May-June 2021 paper 11. It's a subscriber requested video. Before you are watching, if you feel my channel is very useful to you, please subscribe and share with your friends who are looking for AS level paper solution. So we can start. First question. The skill and efficiency of the workforce of a business has increased during the financial period. The owner of the business wants to record a value for this in the financial statement. His accountant advises against this idea. It means the owner wants to record the efficiency and skill of the staffs or workforce, but the accountant is against this. Which accounting concept is accountant applying? As per in the business, the skill and sacrifice and of the employees or the owner never enter in the book. Only we enter the items which value in money. So here the accountant is against because he apply which concept? Money measurement concept. So the correct answer is D. Next, question number 2. On 1st January 2020, Marik bought some machinery. He paid total of $50,000. Of this, $6,000 was for maintenance of the machinery until 31st December 2022. It means Marik purchased a machinery and paid total $50,000. But the 50,000 fully not the cost of machinery. It include 6,000 for maintenance of the machinery till 2022 means 3 years machinery maintenance cost includes. Marik depreciate machinery the rate 10% per annum means per year. Here they are not mentioned the depreciation method, so we take straight line method. How was the expenditure recorded in Marik's financial statement for the year ended 31st December 2020? So in the year of 2020, how this expenditure recorded? They are asking non-current asset, current asset, income statement. So let's check. Here the cost of the machinery is cost is equal to 50,000 minus 6,000. That is 44,000 because 6,000 is for maintenance cost. Next, the maintenance of machinery 6,000. The maintenance of machinery is an expense we enter in the financial statement. But they are paid 6,000 for till December 2022, 3 years. So, we are taking only current year expenditure in the income statement. The remaining amount we transfer to the current asset. So, 6,000 multiply 1 by 3, 2,000 we are entering to income statement. income statement 2000. Then the remaining 6000 minus 2000 is equal to 4000. We transfer to current asset. Next, depreciation. Here the depreciation is 10% per annum. They are not mentioned which depreciation method, so you follow straight line method. Straight line method, we calculate depreciation on the cost. What is the cost here? 44,000. So depreciation is 44,000 multiplied 10% is equal to 4,400. Also we enter in the income statement. Depreciation is the loss, so that also we enter income statement under the head of expense. So that also goes to the income statement. So income statement and cost is available. Current asset. So let's check our question. Non-current asset. Non-current asset, what will be the value of non-current asset? Non-current asset, we show in the book in the value of net book value. So the non-current asset here, machinery value is equal to cost is 44,000 minus depreciation we calculated, that is 4,400. So the non-current asset machinery value is 4,400 minus 44,000 minus 4,400. How much it comes? That is 39,600. 39,600 is the cost of non-current asset. So here given option A and B is 39,600. So we have to check option next, current asset. Current asset, what is the value of current asset? Current asset value we already calculated 4,000 here. So B 39,600 is the non-current asset. Current asset 4,000. Income statement. Income statement we are calculated 2,000 maintenance cost, 4,400 depreciation. So 2,000 plus 4,400 is equal to 6,400 income statement. So the correct answer is B. Next, question number 3. Which statement about depreciation is correct? What is the statement of depreciation is correct? It is an application of the matching concept. Yes, it is an application of the matching concept. That is correct. Next, it provides funds for the replacement of non-current asset. No, depreciation never provide the fund. It is lose the value of the non-current asset. So the second option is wrong. Third, it spreads the cost of a non-current asset over its useful life. Yes, the cost of non-current asset. Each year we are calculating the depreciation. It's spread over of the useful life. So the correct option is 1 and 3. So option A 1, 2, 3. No. B 1 and 2. Option C 1 and 3 is the correct option. Next, question number 4. An item of revenue expenditure is wrongly treated as capital expenditure. Revenue expenditure wrongly treated as capital expenditure. It means they are not ended the revenue expenditure, but they are ended capital expenditure. So where you have to enter the revenue expenditure, it will be understated and capital expenditure is overstated by the mistake. What is the effect of this error in non-current asset profit for the year? Revenue expenditure is day-to-day expenditure entering in the income statement. So revenue expenditure understate. Expense understate means expense understate is equal to profit. When the expense is less than the actual, profit will be more than the actual. Profit will be overstated. So profit is overstated. We have the option A and C is overstated. Next, it is wrongly treated as capital expenditure. Capital expenditure we enter in the non-current asset. So it is more than the actual. So capital expenditure overstate is equal to non-current asset overstate. So the correct answer, profit is overstated, non-current asset is overstated. Answer A is the correct answer. Question number 5. When preparing a bank reconciliation statement, following information is available: bank balance, unpresented check, uncleared banking, standing order. What is the balance on the bank statement? Balance on the bank statement they are asking. So here the bank balance is 20,000 and unpresented check. Unpresented check means cash book is put on the credit side, but the bank doesn't know about the unpresented check, so that is not deducted in the bank statement. So it must be added. It is not deducted in the bank statement. So this amount is looking added only there. Next one, uncleared bankings. Uncleared banking means the deposited amount is not cleared with the bank. So bank doesn't know about the 1,400. So we deduct 1,400. Next, standing order shown on the bank statement, not entered in the cash book. Standing order means given money to the people suggested by the business. So bank must be paid this amount to those people. So that also must be deducted from the bank statement. So the correct answer is 20,000 plus 2,500 minus 1,400 minus 300. So the correct answer is, how much it comes? 22,500, 22,300, 20,800. The correct answer is answer C is the correct answer. Next, question number 6. Question number 6. Why does a business keep both a sales ledger control account and individual sales ledger control account of our credit customers? Sales ledger control account is the total sales ledger account, while individual sales ledger is only the individual sales, the other one is the total sales ledger control account. So why does the business keep this? Let's check. To check accuracy of the sales journal. That is correct. We have to check the accuracy of the sales journal. That's why the business is preparing the both books. Second, to check accuracy of the individual customer's account. Yes, to check the accuracy of the individual customer's account also important. That's why we are doing the individual sales ledger control account. To ensure payment have been received from customers. No, there is no such rule to ensure. Make sure that we are not preparing the control account or individual sales ledger account. Next, to monitor whether customer have exceeded their credit limit. Individual sales ledger account and control account purpose is the first two is matching the most 1 and 2. So the correct answer is 1, 2, 3. No, the B, option B, 1 and 2 is the correct answer. Next, question number 7. A businessman suspects some of his inventory has been stolen. The following information is available. Sales revenue, purchase, inventory on 1st May, inventory on 30th April. All goods are marked up at 33 1 by 3. 33 1 by 3 means 1 by 3 of cost. What was the inventory stolen? Our question is to find the value of stolen inventory. So we can calculate first the sales. First we have to calculate, we have to get the present cost of sales. Cost of sales is equal to purchase plus opening inventory minus closing inventory. So 33,600 plus 8,300 minus 4,500. So 33,600 plus 8,300 minus 4,500 is equal to, that is our cost of sales, 37,400 is come. 37,400 is our cost of sales given in the question. Next, we have to find now the profit of the year, then find the actual cost of sales. So the profit is all goods are marked up 33 1 by 3, that means 1 by 3. But they are not given the proper cost of sales. This cost of sales, there is some stolen inventory. That inventory is not included. So if the markup is 1 by 3, margin will be, margin is 1 by 4. So margin, as per the margin, the gross profit is equal to, gross profit is, we are calculating on sales, 45,600 multiply 1 by 4. That is our profit. 45,600 is the sales. We are multiplying 1 by 4. That profit, gross profit is the 1 by 4 of 45,600, 11,400 is our gross profit. If the gross profit is 11,400, what is the actual cost of sales? Actual cost of sales is equal to sales minus profit. 45,600 minus 11,400 is equal to The actual one is 34,200. But how much we are calculated? 37,400 is the 37,400 is the cost of sales. But when we are calculating, it comes only 34,200. So there is a difference. That difference is our stolen goods. So what is the difference? 37,400 minus 34,200 is equal to 3,200. This is the correct answer. So answer is option B. Next, question number 8. At the end of the year, Barak's draft account showed capital account balance 4,300. His drawing account included a debit entry of $150 for goods taken for his own use. That is the drawing. Barak realized that this entry had been recorded in error at selling price rather than cost price. He sells goods with a markup of 50%. 50% of markup is their gross profit. So, what is the correct closing capital account balance? Barak's draft account showed capital account 4,000, but this error is not affecting the capital account. So the correct answer is, it will be the same amount only. It is not affecting the capital account, this error. So the correct answer is 4,300 only. Next, question number 9. Goods taken by owner for own use 1,000. Drawing is 1,000. Inventory, 1st January inventory is 10,000. 31st December is 12,000. Purchase is given. Returns, debit balance, credit balance. Return debit balance means, what is return debit balance? That is sales return. What is return credit balance? So that is our purchase return. Purchase return also given. What was the cost of sales? The question is, we have to find the cost of sales. What is the equation to calculate cost of sales? Cost of sales is equal to cost of sales cost is equal to opening inventory plus net purchase minus closing inventory. That is our opening inventory plus net purchase minus closing inventory is equal to cost of sales. So what is the net purchase? Net purchase is equal to purchase minus drawing by purchase minus purchase return minus drawing by goods by drawing. So first we can calculate the net purchase. Net purchase is equal to, here the purchase is 75,000. So 75,000 minus, what is the purchase return? 4,000. 75,000 minus 4,000 minus 1,000. So the purchase is 70,000. 70,000 is the net purchase. Next, the cost of sales. Cost of sales is equal to opening inventory. Our cost of sales is equal to, what is the opening inventory? Opening inventory is 10,000 plus net purchase 70,000 minus our closing inventory. What is the closing inventory? Closing inventory 12,000. 12,000 is equal to, how much it comes? 10 plus 70, 80. 80 minus 12,000, 68,000. So, the correct answer is 68,000. So, the option A is the correct answer. Next, question number 10. Which items only appear on the credit side of partner's capital account? Partner's capital account, items increasing in the capital, it will be on the credit side. Item decreasing, it will be on the debit side. So, goodwill in an agreed ratio split, it will not come on the credit side. The splitting goodwill is not coming on the credit side. Opening balance. Opening balance is the balance of capital account till now. Yes, opening balance is, that is the correct one. Opening balance will be on the credit side of capital account. Profit on revaluation. Profit on revaluation, the partner is getting, so it increase his capital. Transfer from current account. Transfer from current account, it will be depend on the debit or credit. So we cannot say always current account balance is comes on the credit side. So the correct answer is 2 and 3. So option C is the correct answer. Next, question number 11. A sole trader has a draft profit for the year 47,500. 47,500 is the draft profit. No entry has been made in the respect of the following. At the end of the year, trade receivables were 5,600, more than the previous year. It is more than the previous year. If the trade receivable is X, the 5,600 is X plus trade receivables. So X plus 5,600 is the this year trade receivable. However, irrecoverable debt. What is irrecoverable debt? Irrecoverable debt is called bad debt. Bad debt is 3,060. Had not been written off. They are forgot to written off this amount. The trader maintains a provision for doubtful debts 6%. That also we have to calculate. A machine had been sold 4,000. It had a net book value 3,500. So there a machine sold 4,000 was the selling price, but the net book value was only 3,500. They sold for 4,000. What will be the correct profit? They are done the errors, they forgot to enter the above. So we can calculate. The actual profit is 47,500 is the actual profit. Now there is the expense. We have to, one expense is there, then one income also is there. First we can check the expense. Expense is bad debt written off 360 and provision for doubtful debts. So we have to deduct the expense. 360 expense is there, that is bad debt, minus we have to deduct provision for doubtful debts 5%. So first we have to calculate the provision for doubtful debts. How to find the provision for doubtful debts? Provision for doubtful debts we are calculating after deducted the bad debt. So here excess, the provision for doubtful debts, increase in provision is going on the debit side of the income statement. Decrease in provision is on the credit side. So here this is increased. The trade receivable is increased. So our provision for doubtful debts also increase. So it will go to the expense. We have to deduct. So the provision for doubtful debts 5,600 minus bad debt. Always you are calculating provision after deducted the bad debt. So 5,600 minus 360 multiply 5%. What is the amount? It is coming 262. So we deduct 262 provision also we deduct. So the total is 622 is the expense, because expense they forgot to enter means profit is overstated. We have to deduct. Next, a machine had been sold 4,000. Machine sold for 4,000. Actual net book value 3,500 only. So 4,000 minus 3,500. 500 is the profit on sales. We will enter on the income side. It will increase the profit. So we have to add with profit 500. So what is the corrected profit now? The corrected profit is 47,902. So the correct answer is C. Next, question number 12. A sole trader had trade receivables 21,650 at the start of the year. This is the opening trade receivables. During the year, there were irrecoverable debt, bad debt 450, cash received from customers 42,670. At the year end, the statement of financial position showed trade receivables 25,745 after deducting a provision for doubtful debts 5%. What were the sales for the year? So here we have to calculate the sales for the year. How to calculate the sales for the year? Either we can prepare the control account, or by equation we can do the sales for the year. Sales for the year is equal to opening inventory plus cash received from customers plus bad debt minus closing inventory. So otherwise we can open a control account. Control account, sales ledger control account. Sales control account. The easy tip: increasing debtors on the debit side, decreasing debtors on the credit side. So here opening trade receivable 21,650 on the debit side. So 21,650 on the debit side. Then bad debt. Bad debt is decreasing the debtors, so it's on the credit side 450. Then cash received from customers. When the customer pay the money, that is decreasing the total debtors amount. 42,670. Then next, at the year end, the statement of financial position showed a trade receivable 25,745 after deducted the provision for doubtful debts. In the control account, we shows the sales before deducting the provision for doubtful debts. So we have to get the trade receivables before deducting the provision for doubtful debts. So after deducted 5% means this amount shown here, this is 25,745 is after deducted 5%. So it is 95%. So our actual trade receivable before deducting provision for doubtful debt is 100. So how to find 25,745 divided by 90 multiply 100. How much is the amount? What is the amount? It will be 27,100. That is our actual closing trade receivable. Opening trade receivable on the debit side, closing trade receivables on the credit side, 27,100. So now we have to find the value of the sales. Value of the sales is the always come on the debit side. So that is the difference. So what is the credit side total? Credit side total is 70,220. We just balance. The balancing figure is our sales. 70,220 minus 21,650. What is the amount? 48,570. 48,570. So the correct answer is D. Next, question number 13. L, M and N are in partnership, sharing profits and losses equally. The ratio is 1:1:1. Divided by 3. On 31st December 2020, who is retiring partner? N retired. N's capital account 30,000 and his current account has a debit balance 5,400. Profit for the year was 21,000. The profit of the year is 21,000. Before paying L's salary 6,000. The goodwill was valued 18,000 but not remain in the books. Other assets are to be revalued upwards. It is increasing 6,000. How much will N be entitled? N, how much he will get on his retirement? The question is, we have to find the total amount of N. The total amount of N, first we calculate what is the total capital of N, 30,000 and debit balance 5,400. So we can calculate the amount of N is 30,000 is his capital account, 30,000 and debit balance of current account means the current account he owes money to the business. So the debit balance always we deduct from the capital account. it goes to the debit side of capital account. So minus 5,400. Next, we have to find profit for the year. 21,000 is the profit for the year. Before paying L's salary, always partners get the divisible profit after adjusted interest on capital, interest on drawing, partners salary and other commission. So first, after deducted 6,000, that is the divisible profit. So we have to find the divisible profit here, that is 21,000 minus 6,000. So the 21,000 minus 6,000 is 15,000. 15,000 is the total divisible profit divided by 3. They are sharing the profit equally. So one portion is n's portion. Divided by 3 is equal to 5,000. This 5,000 he has to get. So we will add 5,000. Next, goodwill was valued 18,000. The goodwill amount is valued 18,000. So when the one partner is retiring, he is sacrificing his goodwill. So the gaining partner should give his goodwill portion. He has to get the amount in the time of retirement. So what is the portion of his goodwill? 18,000 divided by 3. 6,000 goodwill. He has to get 6,000 goodwill. So the amount is 6,000. We will add goodwill 6,000. Next, other assets are to be revalued upwards. Revaluation profit also we are adding with the his capital account. Revalued upward. When the assets and liabilities are revalued, the value is more. Value is more. It will be good for him. So how much is the value more? 6,000 value more. It means 6,000 is the revaluation profit divided by 3. His portion 2,000 L has to get. L has to get 2,000. That also we added. One more time. We deducted 5,400 current account balance. Then divisible profit after deducted L's salary 15,000 that he share. 1:1:1. That means 1/3 of 15,000, 5,000. Then goodwill amount 18,000 his portion is he has to get. He is leaving the firm. So 18,000 into 1/3, 6,000. Then revaluation profit 6,000. 6,000 into 1/3, 2,000. The total amount he has to get 37,600. Correct answer is option B. Next, question number 14. Charlie and Daphne are in partnership. C and D are in partnership, sharing profit and losses 2:1. Their fixed capital account balances at 31st December 2019 were 20,000 is the capital account balance of and 20 and 13,000. They changed the terms of partnership in 1st January 2020 to introduce interest on capital at the rate of 10%. As per the changes of partnership business, they decided to charge interest on capital. Which effect did this change have? Charlie's total share of profit for the year ended 31st December. Before there was no interest on capital. So now there is the interest on capital. So how much the amount he will lose? So interest on capital, the amount first we deduct from profit and loss appropriation account. So his profit share will decrease because they charged interest on capital. So the profit share will decrease. Total decrease in the profit. How much will be the interest on capital? 10%. 10% means 20,000 plus 13,000, each one's 10% into 10%, total 3,300 is the decreasing in profit. So they will lose this amount. So how much he will lose the amount? 3,300 into Charlie's ratio. Charlie is the 2 by 3. So 3,300 multiply 2 by 3. He will lose from the actual profit share, he will lose 2,200. The same time, Charlie gets some amount, right? Interest on capital. Charlie will get his interest on capital. His interest on capital is equal to 20,000 into 10%. So he get 2,000 he get as interest on capital. So his profit total effect, he get, how much he get? He get the amount 2,000 while he lose the amount, how much he is losing? He is losing 2,200. So the net effect 2,000 decrease in his profit. So the correct option is option A. Decrease in 2,200, not 2,000. Decrease in 200 is in his the net effect is decrease in 200. Next, the question number 15. What will be debited in the appropriation account of partnership? Profit and loss appropriation account of the partnership means the business firm prepare profit and loss appropriation account in the view of the business, the transaction between the partners and partnership firm. So interest on partners drawing. Interest on partners drawing means the partnership business is collecting from the partners. So interest on partners drawing is not going on the debit side, it is going on the credit side. Interest on partners loan, we never enter in the profit and loss appropriation account, it goes to the profit and loss account. Salaries of the partner, yes, salaries of the partner, partnership firm is giving to the partner, it is on the debit side of the profit and loss appropriation account. Partner's share of goodwill. Share of goodwill never enter in the profit and loss appropriation account. So the correct answer is 3. So option D, 3 is the correct answer. So today now we have solved question number 1 to 15. Then question number 16 to 30 video we will do in tomorrow's class. Hope you all are clear with today's solution. If you have still any doubt, please put in the comment box. I will clear you. Then if you want any paper solved from my side, I am ready to help you. That also please mention the paper in the comment box. I will solve for you. So before closing, please, I request you to subscribe my channel. Thanks for watching.